Wow, Bitcoin's price has just taken an absolute nosedive. It's been a wild, turbulent ride for investors for sure. So in this explainer, we're going to get to the bottom of what's really driving all this volatility.
So get this, Bitcoin, the biggest crypto out there, has plummeted to around $73,000. That's its lowest point in 15 months. I mean, that drop has completely wiped out all the massive gains we saw since late 2024. And you'll remember, that period started with so much optimism.
So the big question is, what is really going on here? Well, to figure this out, we're going to break it down and look at it from three different angles. First, what was the immediate trigger for the crash? Then, we'll zoom out to the bigger economic picture. And finally, we'll talk about what this all means for the future of Bitcoin.
All right, first up, let's dive right into the most immediate cause. We're talking about a massive, cascading sell-off that happened with just, breathtaking speed. In just a single 24-hour window, nearly $740 million in bullish crypto bets were just liquidated, gone. The sheer scale of that sell-off, that's what really sent shockwaves through the market.
So how on earth did this happen so fast? Well, it all comes down to something called leveraged long positions. Okay, in simple terms, think of these as super high-risk bets that people make with borrowed money. Traders were essentially betting big that the price would go up, but it went down instead. And when that happens, their positions get force-sold automatically to cover the loans. It's a brutal mechanism.
And that's what triggered this insane chain reaction. As Richard Usher from OpenPaid put it, the falling prices led to more of these forced sales, which, you guessed it, pushed prices even lower. It's a classic vicious downward spiral that just feeds on itself and is incredibly hard to stop.
But, a sell-off like that doesn't just happen in a vacuum. To really get the full story, we need to zoom out a bit. Let's look at the much bigger picture, the shifting economic tides that really set the stage for this whole thing.
And this timeline here really shows a complete reversal of fortune. Think back to late 2024. There was all this optimism, right? Sparked by hopes for friendlier regulations and really fueled by the Fed cutting interest rates. But then, fast forward, and things started to change. By late 2025, you get these hawkish signals from the Fed that start to sour the mood. And then the nomination of a hawkish Fed chair in 2026, well, that just amplified all the concerns about liquidity.
And you can see the impact of that shift crystal clear in the data. We're talking about billions with a B of dollars being pulled from the major institutional Bitcoin ETFs. Look at this, $7 billion in November, $2 billion in December, another $3 billion in January. When you see numbers like that, it's a huge signal that the big money investors, the institutions, are starting to get really nervous.
So all of this has kicked off a really fascinating debate among the experts. What does this all actually mean for Bitcoin? Is the magic, the thing that's propelled it for so long, is it starting to fade?
And right at the heart of this whole debate is a really cool concept from analysts at Deutsche Bank. They call it the Tinkerbell effect. The idea is simple, really. Just like Tinkerbell and Peter Pan, Bitcoin's value is sustained as long as enough people believe in it. So the big question right now is that collective belief starting to waver? Especially when those wider economic fears we just talked about start to creep in. Think about it. When money is cheap and easy to get, it's a lot easier to believe. But when things tighten up, that belief gets a real stress test.
And this really leads us to two very different ways of looking at this crash. On one side, you've got the traders' view. They see this as a temporary washout, just clearing out the weaker players. They're convinced that once the wider economy improves, investors will come rushing back. But then you have the analysts, like those at Deutsche Bank, who are arguing this is something much bigger, a fundamental shift. They think the era of pure speculation might actually be coming to an end.
That second theory, that this is a fundamental shift, is the perfect lead-in to our final section. Because no matter what you think about the short-term price swings, there's a growing pile of evidence suggesting that Bitcoin is entering a completely new chapter of its life.
What many analysts are suggesting is that what we're actually witnessing is Bitcoin, it's maturing, it's growing up, it's moving away from being just this high-risk speculative bet and becoming a much more integrated and, frankly, more serious part of the global financial system.
And look, this isn't just some abstract theory. It's being driven by real, concrete developments. You've got major regulations coming in, like Europe's MiCA and the upcoming Clarity Act in the US. We're also seeing much better custody solutions for keeping crypto safe. And, of course, the huge introduction of spot Bitcoin ETFs, which have made it so much easier for the big institutions to get in on the action. So when you put it all together, yeah, the recent price drop is definitely painful for a lot of investors. No doubt about it. But maybe the real takeaway here is something even bigger. Maybe this crazy volatility isn't a sign of failure at all. Maybe these are just the turbulent and necessary growing pains of an asset making the huge leap from pure speculation into a mature institutional player. So the final question is, what will that new, grown-up version of Bitcoin actually look like?